Hello and welcome to Money Control Stock Market Watch, and let me welcome on the show Jigar Mistry, the co-founder at Buoyant Capital, joining us to tell us what could be the best returns for the equity investors in the retail side, even in a volatile market like today. Jigar, always a pleasure to have you on CNN News 18. Hope Diwali was good and New Year is going great. Now, I want to ask you about the volatility that we are seeing in the market right now. What should retail investors do at this point?
Good morning, Nisha. Always good to be on your show. Happy Diwali to you too. Over the last 3-4 interactions that we are having on this channel, we have been highlighting that the setup has not been all that great. And even when you look at the last few days, the FII selling continues. Even yesterday, Nykaa's delivery volume was almost 3,900 odd crores. But despite that, the FII number overall was a negative number. When you combine that with the fact that the inflows into mutual funds have been more or less flat and actually falling, I think last time in the month of October it has only been 5,800 odd crores. It looks as if the market is losing some bit of steam. We have been sort of advising investors and your viewers to take a little bit of a cautious stance. Going forward, they should only be looking at buying stocks which they are happy buying, even 10-15% lower. Indian markets will do good over medium to long term, but right now it's time to be a little more cautious.
All right. When you say cautious, if there are certain value stocks and blue chips is what the retail investors tend to gravitate towards in volatile markets. So are there any cheap pockets, or do you think the volatility will continue and there'll be better opportunities, so there should be wait and watch?
There are few good opportunities, Nisha. So, banking is one theme that we have discussed in the past. They have done well over the last few months, especially with the results coming out. But I think, a few good banks still continue to make the mark. ICICI, SBI is something we have discussed in the past. Canara Bank, Federal Bank has done fairly well. Karur Vysya Bank is something that we don't own yet, but we are very carefully looking at it. That continues to be a good space. Right. On the other side, a few chemical names are continuing to do good. We have discussed Fluorochem in the past. That's one company that we continue to like. The results that they announced yesterday were reasonably good, and I think that still offers a little bit of the upside. Insurance is a space that continues to be good, so one can take a pick. SBI Life is driving a very strong growth this time around. Max Financial is another company that we have owned for a very long period of time and continue to like. Lastly, there are a few pockets in commodities which make sense, and although you've seen steel prices come off, we have been sort of highlighting that is not an ideal space to be in. But non-ferrous continues to be a very good position, and Vedanta is one name that we have owned in the past and continue to own for now.
Right. You mentioned commodities, and Jigar, the commodity space has been volatile always. They are high beta stocks. It goes up with tremendous volumes and high degree, and the same is when they have a downward trajectory. Do you recommend that to retail investors who have small hard-earned money to put in good investments, prudent investments, and are ready to be patient over 1 to 2 years?
It's a slightly broad level call, Nisha. So, you look at the relative size of printing of central banks. People will eventually gravitate to assets which are in limited supply, right? So, when US is printing so much money, and then you look at the Euro bloc that's been printing equally as much money, and then you look at Japan, and then you find that they've actually been printing for 31 years now. So then you look at assets that are, relatively in shorter supply, and therefore you gravitate. Some people might gravitate to crypto, and then you find that they aren't really regulated. A lot of people don't understand it. So let's not go there, and therefore you come to hard assets. So you've seen real estate do reasonably well over the last few months. Commodities is another company. Yes, it tends to be volatile, but you can sort of get positioned into companies that are reasonably well run. You can take a pick. Non-ferrous, Hindalco is an equally well run company. Vedanta offers a lot of value. So you can take a pick, but hard assets.
So from good business houses and
Sorry,
right. Very quickly, Jigar. Zomato had a bumper listing. A lot of retail investors didn't get the allotment. They have been tweeting about it. What's your quick view on Zomato and Paytm, which just closed its subscription and about to list?
Little difficult to say. These are ultra high duration bonds. We might not realize it, but the US interest rates affects the valuation of all these companies. We haven't bought either haven't bought either Zomato or Nykaa, or are unlikely to participate in Paytm either. These are loss-making businesses coming at an ultra-high valuation. We might want to understand their businesses a little more before we take the plunge.
All right, so Jigar, caution there not to have FOMO and focus on quality stocks which have hard assets as well as good track record of performance. Thank you so much for those pearls of wisdom for retail investors in the equity markets. With that, it's a wrap on Money Control Stock Market Watch. Have a great day.